G'day traders, I just want to do a quick video. Actually, I don't think it's going to be quick. I've got a few examples to go through, so I'm just going to try to get through it as quick as I can. But this is about the engulfing pattern and why it's so important, why we should take notice every time it turns up. I just want to go through it. Basically, what is a bullish engulfing pattern? Bullish engulfing, so we see a downtrend has been evident, and the first candle is bearish. So the first candle of this two candle pattern is bearish. And then, usually what we see is a couple of reversal patterns around here, reversal candles like hammers or something like that. But if not, that doesn't matter really either. What we're after is a downtrend, a red candle being the first day of the bearish reversing candle, and then a pattern. And then we see a open that's at or lower than the previous day, day's close. And then we see it close above the previous day's open. And then we see an uptrend usually happen from here, unless if not, this is the breaks on the downtrend. The downtrend is happening, one of these happens, and the downtrend doesn't last too much longer after that in most cases. The key criteria. So the first one is the market must be in a clearly defined downtrend. So we do want to see that after, before we see the engulfing. The first candle is the bearish candle. The second candle is the bullish candle. The bullish candle engulfs the previous day's candle's body. Bullish engulfing pattern is an important bottom reversal signal. As we can see, the bullish engulfing pattern is a very easy signal to identify. At the end of a downtrend, it becomes evident that the bulls are now involved, and the bullish engulfing pattern is the major reversal pattern comprised of two opposite engulfing body colored candles. The engulfing signal can be formed with the open and the close of one end of the pattern being equal, but not both the close and the open being equal. In other words, it can open where the red closed, but it has to engulf and go above the previous day's open, or vice versa. The engulfing candle or pattern is important for two reasons. First, it occurs often. You see these everywhere basically, and we really need to take notice and put other rules in place so that we can actually see when they work most effectively. They produce a high probability that the trend has reversed. Not only has the trend reversed, but the buyers have become enthusiastic about getting into the position. The most obvious element of the engulfing signal is that the candle body color is completely opposite of the previous trend. Another thing to point out here is that the body of the second day completely engulfs the body of the first day. The shadows here are not a consideration. Some people say that the shadows are very important, but really what we're looking at is the bodies. We want the body of the second candle to engulf the body of the first candle. If the shadows are included, it gives more strength to the bulls taking over, but it is not a must. It doesn't have to be that way. The signal enhancements here with their engulfing reversal pattern are a large body engulfing a small body. Obviously shows that the buyers have come in with good force and the sellers have actually run out of steam with less to sell. When an engulfing pattern occurs over a fast move down, there is less supply of stock, which basically means coming towards the end, there's less and less people that want to sell. And then once we see that the bulls have moved in and bought the position, it completely engulfs, and there's so many buyers and so little sellers in the market at that time. So that's why we see the big engulfing candle engulf the previous day's sellers where there's not as much selling going on. An engulfing body which engulfs more than one of the previous bodies demonstrates more power in the reversal. If the engulfing body engulfs the body and the shadows of the previous day, the reversal has a greater probability of working. When the second candle appears and it opens lower than the previous day, the further down it opens and then comes back with strength, the more strength the engulfing pattern is going to work, or has more potential of working, I should say. One thing we're going to introduce into this video with the engulfing pattern is the use of stochastics being oversold. The appearance of a bullish engulfing signal when stochastics are in an oversold condition produces an extremely high probability that the trend will move to the upside. The deeper the selling, starting the bullish engulfing for formation, the more convincing that the weak stock has finally been sold into strong hands. As you can see, the candles tend to get smaller and smaller as they're coming down into the end of the downtrend. And then we see a massive engulfing candle happen at the beginning of the uptrend. And that's where we see that the strength has basically come into the buying hands and gone out of the selling hands. When we include stochastics in our analysis, and we see that we've had an evident downtrend and it's been lasting for quite some time, and stochastics are still remaining in the oversold condition, you usually don't see too many strong reversals, but when we see a strong engulfing reversal, you'll see that stochastics will quickly turn up and come out of the oversold condition. So even when stochastics are oversold, we're looking for an engulfing pattern to take us out of the oversold condition and looking to buy on that candle. Righto traders, we'll go through some charts. I've just got a few examples here. Actually, I've got quite a few examples. Here we can see we've closed below the 9, we've got an indecision day, and then we've got an engulfing day. With this indecision day, I don't actually include that. This is actually a very good day to give strength to the engulfing pattern, simply because the big argument that happened between the bulls and the bears, it didn't go anywhere. Nobody won. So this is an indecision day. Then the next day is decision made, and especially when it closes above the 9, that to me would be an entry. As we can see, this one didn't go very far, didn't go very well. Did they always work? Absolutely not. But what we want to do is bring some rules into play later on in this training so that you can actually see when they work more often and when they don't. Here we have another one, very similar example to this one back here. Got another engulfing pattern that happens there, and then we have a big sell-off. Then we've got an engulfing pattern that happens here. We've got a rounded bottom, and then an engulfing pattern there, engulfing pattern there, and an engulfing pattern there. So as you can see, they kind of happen pretty frequently. I've just gone through my watch list and just put these on there, and just like I didn't choose any out of the box to make them look special or anything like that. I just just did my watch list to see what they look like. And here we are with Shiba, and here we got an engulfing pattern there, an engulfing pattern there, an engulfing pattern there, and an engulfing pattern here. It'll be interesting to see what this does. Like if we get another engulfing pattern here, we've got a low, a high, high, low, and then we'll have a higher high. We'll see what happens after that. Let's keep moving. An engulfing pattern here at the low, which is good. An engulfing pattern off the 50, an engulfing pattern into the bodies making new highs, which is also good here. Now, I've marked this one in red for a reason. Simply because how high do we expect it to go before we see some sort of profit taking? And as we can see here, that's gone from 77 cents all the way up to $3.60. So this engulfing pattern up here, we've got wide and loose trading at this stage. I wouldn't be interested in buying this one here. That to me would be a red flag, and I wouldn't be interested in buying it. These ones down here, we want to buy engulfing patterns off the low or after a pullback. Remember the rules at the start. We want to decline. We want to be buying the engulfing pattern coming out of a decline, not out of a rise. On to the next chart. Here we are again. I just got to shrink these out because I kind of had to move these each time I drew on them. So here we are, we've got a bounce on the 50, an engulfing pattern there, another engulfing pattern that's taken us above the 9, an engulfing pattern here, an engulfing pattern, another engulfing pattern, another one, and another one. We're going to get to a few rules shortly, so one thing that you need to keep in mind as well is that when you backtest these engulfing patterns, you'll actually find that some will work really well in some places and some just won't work at all in other places, and you wonder why. And only backtesting can give you those answers as to why they don't work. And if we're having a look, so we want to see a significant low, like coming out of a low to start, and then making higher highs and all that sort of stuff, and then looking at the engulfing patterns like this. And then if we have a look at stochastics being oversold as well, unfortunately, this one here, if you didn't have your stops like a little bit further down, you would have been stopped out on this one here. And then the same again here. So this is just one of those unfortunate kind of a chart that that it didn't really work very well for. That's another thing. Say with Monero, for example. Monero has a tragic track record of engulfing patterns and all that sort of stuff. And I get stopped out of Monero quite often, but I still like Monero because it's a privacy coin. But that I wouldn't trade Monero. There has to be very good reasons to be trading Monero and cryptocurrencies that actually this works for or it doesn't work for. So let's just have a look here without putting any other analysis on. We've got an engulfing pattern here, another one here, another one here, and another one here. This is actually quite big and large, this one here, but we'll keep on going. I'm going to bring some more analysis up in just a minute. Oh, what happened there? Where is my analysis on that one? Oh, maybe I've gone too far. No, I haven't. Here we go. So I don't actually know why I didn't do anything on this one here. Oh, I did. Look at that. My chart's gone too big. So here we are. So here I'm after a decline before I see an engulfing. So this one here would be an engulfing after a decline. That's all right. But if we have a look back here at the beginning stages of this rally, and then I'll just open that right up. And so here we've got an engulfing pattern up there, and that would have got stopped out. We've got an engulfing pattern here and another engulfing pattern here. Now this is beautiful to be looking at these things after a major decline, because you know, if we're looking at the entry there, $6.10 and say $11.50 or something like that, and then we're going out to $44, you know, and it even goes higher after that. So, you know, they're the sort of things that we're looking for. Oh, there's even another one there, so which we wouldn't have got in, would have got stopped out on. Let's have a look at the next one. Okay, so here we are. We've got a little bit more analysis on this one here. Now, I'll just open this up a bit more so we can kind of see it a bit better. Shrink that a little bit. Okay, so here we can see, now I've just brought a few things into play here. So the first thing is stochastics being oversold. So after a significant decline, we've got the first day of the reversal here, and then we've opened a fraction lower and then closed well and truly above it. Now, this one here, like I always like it if it closes above the 9 EMA, but if it, you know, this kind of a pattern here, stochastics coming out of oversold, I'd be putting at least a half position on here, if not a full position. And then I also like, you know, well, actually, even if I put half position here and half position here, I'd be happy with that. There'd be no problem at all in doing that. And then we've got a bounce on the 50 and a close above support being here, and say, you know, previous high bodies, and a close above there with an engulfing pattern, which is also nice again. Stochastics oversold again here. We've got, you know, now let's have a look at this. This is exactly what I was saying before. Now we've got an engulfing pattern here, but it's at the top. Look at what happened after it. So, you know, we're looking at buying from the lows, not buying from the highs. And we've got a low here at $14.60, you know, down there, like say $14.50, $14.60 or something like that. And then at the top here, we've got, you know, $30.60, you know, so how high do we want it to go before we're going to have some sort of a pullback? Having a pullback in the market is a healthy thing to do. And so anyway, like from that low to that high, you know, like I wouldn't be buying any engulfing patterns up to here, you know, I'd be waiting for a significant pullback. This one here, I'll probably have a go at. This one here, I think it's probably a little bit too soon. I want to see it get closer to the 50. Anyway, here's another engulfing pattern here. Stochastics are oversold. Another engulfing pattern here. Stochastics are not quite oversold. Let's move on, shall we? Okay, let's have a look at this one here. So there's, as we can see with this one, we've got a high, a low, and engulfing, a high, a lower high, and a lower low, and engulfing, a lower high, and a lower low. So obviously we can see here that, you know, this is engulfing to the south side, and we've gone through and now closed below the 9. Now that should be ringing alarm bells. Or, you know, I'd be thinking, okay, well, this isn't too an aggressive, you know, sort of a decline. We could probably, you know, like, I'd almost think we might even be heading over to the 50, which is exactly what we did. Then we've got an engulfing pattern. So stochastics are oversold all the way to here. We've got an engulfing pattern bouncing off the 50. Now we're going to close above the 9, which is excellent. Here we get another one. I'll be buying this one as well because we were breaking new highs. And then, you know, like another entry there if you wanted that one there. So, and then we've got, you know, we're starting to get a little bit high on this one here, but I don't really know what happened after that. So we'll just have a look. Yep, look at that. Got another engulfing there, and just shrink it up a fair bit. Look at that. So beautiful engulfing off that one there. Away we go. We'll carry on. Now, another thing that I also use is support and resistance area. So if we're, you know, look at that beautiful engulfing off the bottom there, that's perfect. Stochastics oversold, engulfing, bang, away we go. But here we've got resistance, and then we're broken through resistance, found support the very next day, and found support over here. But look at this beautiful engulfing pattern. Stochastics are oversold, off previous charts, resistance becomes new support. And so that's just an example there. Here we are bouncing off the 50, no engulfing there, no entry. Here we've got an engulfing closing above the 9. That to me is a buy there. Here we've got an engulfing. Stochastics are oversold, only just, but they are. An engulfing pattern here. This one here, I'll be a little bit, I'm not sure if I'd actually be buying this one in a hurry. I'll be wanting to close above the major moving averages before I was to buy into this one here. This one here, on support, yes, I'd be buying. Stochastics oversold. Thank you very much. I'm in. All right, this one here. Now this one here, we didn't really have enough data to be, look at that. The very first day it sold off. The very next day we got an engulfing pattern. That's saying something good. So at this stage here, if this was a new issue, which it was, I'd be looking, okay, we've got an engulfing pattern there. I don't know if I'd actually get in there. I'd probably be looking for the break of new highs. So low, high, high, low, high, high. And then be looking at engulfing patterns, bouncing off the previous chart, off here. And then we can see what happened there. So we've got a massive push there with good volume. Comes back and we've got stochastics. We've got that's coming out of stochastics oversold too. Then we've got an engulfing to the north side, another engulfing to the north side. This is starting a little bit high for me. And then we can kind of see what happens. So another thing to do is look at price. So that's $1.03, and then we're buying up here to $1.60. It's starting to get a little bit high. Up here we've got $2.20. So yeah, such a new release, don't really have enough data. Let's have a look at the next ones. All right, so even got more over there. So we'll just shrink it up a little bit and have a look. Okay, I think that's about all we got. So stochastics here are oversold, and look at that, beautiful, fantastic. And so here we had an engulfing pattern, and even if you were to buy that engulfing pattern there, you wouldn't have been stopped out if you had your stops. So if you bought this engulfing pattern here off that one there with stochastics oversold, you could have had your stops just below the low of that candle there, and it had gone over sideways. Now this is getting quite frustrating if you're a trader like trading this one. You'll be thinking, oh man, this isn't much fun at all. It's just going sideways, down, 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 and now it looks like I'm going to lose the trade. But an amateur trader would sell around about here and go, no, I've had enough. And a professional trader will go, no, this is part of my calculation. I know that 7 out of 10 of these are probably going to make money if I buy in the right areas. So I'm going to leave mine there, and then it comes down here, and voila, look what happens. And here we've got, if you did want to get out of this one here, you'd be buying this one here. If you didn't, you're practicing amateur status, so don't be doing that. Do what the professionals do. Sometimes you gotta, practice. You gotta show some guts and glory and all that sort of stuff. And you don't want to buy, but your back testing will tell you that this is the right area to buy. And so stochastics being oversold, engulfing, and then we're going above the major moving averages at this stage here. And then we've got bouncing up nicely. And then that's not quite an engulfing. This one here is an engulfing, closing above the 9. Stochastics are oversold. Perfect opportunity to be buying right there. And then look at what happened after it. Beautiful. Here, now this is high, quite wide and loose trading, which I don't really like. We do usually get a bounce on the 50 that will take us up. It usually takes us up, about 2/3 of the way of this when we get wide and loose trading. It usually gets us closer to the top. But, if you were to get in here, obviously it didn't last very long and we're going sideways. Stochastics oversold again there and there. Buying here, you wouldn't have been stopped out there if you bought that one. Buying here, you wouldn't have been stopped out here if you bought this one here either. Here we go with Stellar Lumens. Stellar Lumens, just, I try to practice patience with Stellar Lumens, but, Stellar Lumens to me is a bit like Monero. Here we go, stochastics oversold. We've got a huge downtrend in play. Actually, I'll just open that up a little bit so you can see it a bit better. Now we've got a big long wick here, or a huge candle coming down. Big long wick here with massive volume, and then we've got an engulfing pattern to the north side. So, if you were to be buying there and having your stops below the low here, or, just below the low, you would have been very close to getting stopped out. If you had it at the low or just a fraction below the low, I don't know if you would have been stopped out. You would have been very close, But anyway, stochastics oversold, and it went up from there. Then it came down, and then, we don't have an engulfing pattern there. That's not an engulfing pattern. And, I'd be looking for other reasons to be getting in here, like breaking the new high with, best friend. Come out to here. But anyway, if we have a look at what happened here, this is 20 cents and this is 40 cents. So it's gone up 100% move. And then it's kind of, failed after that. Here we've got stochastics oversold, another reversal. And here we don't have stochastics oversold, but we do have an engulfing pattern, almost actually. That's gone down. We didn't open lower. We actually opened a little bit higher, which is not exactly what we're after. We want the sellers to still be in control at the open and then be completely slammed by the end of the day. That's what we're chasing. Right, and next one. So here we are, we've got an engulfing pattern. I'll just shrink it up a little bit. Here we go, we've got a nice downtrend. We've got massive volume here, an engulfing pattern there, stops just below the low there, and then we're going up and then we've come down here, you would have been stopped out on. And then we've got stochastics oversold and your second entry. This actually looks a little bit better than the previous entry anyway. And then we've gone up nicely. So if you were to get into this one here and you lost 1% of your account trading this one here, and you were to get in here and you didn't lose 1%, have a look at the run that happened after it. You'll usually find that the second time that the entry works, it works so much better than the first time. And here we are, we've got, the first one here, stochastics oversold, you would have been stopped out on this one as well. And then, this one here, stochastics aren't oversold, but, that to me just looks like a very good entry. But anyway, we're looking at stochastics oversold, engulfing patterns at this stage. So, only your back testing will tell you if you should be buying the next entries. What we're looking at the moment is a long decline and our first entry. If we're buying underneath these major moving averages, we have to have some very, very strong rules in place, and we need to obey those rules and back test those rules in order to know exactly where we are. So stochastics oversold, a strong downtrend in place, and a good strong reversal pattern happening. And this selling volume is massive. So this is like the reverse of our buying. When we see massive volume at the last candle at the top, then we know that the trend is about to change, or if not changing now. And that's what we're looking for. Okay, I think that we're almost finished. So I'll just open this up here. So here we don't have enough data. Stochastics are oversold. There's not really much to talk about here. But we can see something's happening with the trend around about here. We can see an engulfing close above the 9, an engulfing close above the 9, an engulfing close above the 9. And, I don't know what the market's going to do from here. But we can see that there was a lot of strength that was happening around here in these areas. Stochastics being oversold as well. Okay, so there's a few more on this one. Okay, so here we go. So we've got so it opened here on this platform, and then it traded all the way down and then closed here. And then we're going down, and then we've got an engulfing pattern down the bottom here. Stochastics are oversold. I wouldn't really trade this one being such a new issue. If you were to only be like half a percent, I'll be risking. Then it's up there, and then it's pull back, and I don't really know. Looking at these ones here, let's just go through the engulfing pattern with stochastics oversold. Here we go, stochastics oversold, and we've got an engulfing pattern closing above the 9, and there was a good trade in there. So that closed at 62, and then the high was actually 86. So but look at that one candle just brought it straight back down. You would have been in the red from there. Looking to get out. Hopefully well, that's if you were to trade that. But anyway, stochastics oversold, reversal there. Stochastics oversold, reversal there. I don't really like what it's doing at the moment though. I always like it better when they close above moving averages. But anyway, this hasn't done anything wrong yet. It's only done something wrong when it closes or when it trades below the swing low, which is this one here. So I'd be putting my stops there at around about 42.50 or something like that, and go from there. On to the next chart. Okay, here we are. Look at this. This is beautiful. Stochastics oversold, big engulfing reversal, bang, after a good significant downtrend. And then look at this, another engulfing pattern. This is closed above the major moving averages. Now this is what I'm saying about the ones that don't, here we're trading out of a low after a significant decline. Here we're trading on a different kind of reason. We've got like good support. Now once we've closed here, we've got good support under us, and we can be putting our stops below the swing low, which is this candle right here. I'll just kind of open that up a little bit more so you can kind of see a little bit better. So this is the engulfing pattern here that I'm talking about. So, buying, if you were to be buying here and then having your stops just below the low of this candle here, so $11.50, so, or something like that. And then here we go again. We've got, a nice pullback and closing below the 9, and then completely reversing, closing back above the 9 and engulfing the previous candle. Stochastics oversold, beautiful. I'd take that one every day. Now, even though it did get stopped out, this to me is a good entry, and I'd buy it again. Just because it didn't work that first time, but anyway, over here it did. And plus, how many entries have you gotten at this stage here with this here? And really, at these lows here, would you be expecting a bounce? You know, like looking across here, would you be expecting that we might make a high and then come back to the 50 and make a double bottom bounce at this stage here? Because we all know what that entry is there. And, you know, yeah, anyway, so yeah, I just kind of get carried away when I talk about crypto all the time. Here we go, Stochastics oversold, bouncing off the 50, beautiful, I'd take that. Stochastics just oversold, bouncing above, on the 50, closing above the 9. Yep, every day I'd be taking this one here, especially after a nice decline like that. Even though we see it's gone up nicely and then it's pulled back, there's something wrong with the trend here, and then bang, like look at that, we can see what's happened. So I just, I've gone 25 minutes now. I really didn't want to do that. I was hoping to have this done in about 10 minutes, but I hope that you get an idea of what I'm actually chasing here. Now, the best thing to do is, you know, be buying these after a decline. Like if we look at the rules, after a decline, stochastics oversold, engulfing reversal pattern. That's what we're after. So, and if you've got big, massive volume that's, you know, confirming that the sellers have just, you know, completely sold out, then that's another good time to buy. But keeping in mind, stochastics oversold, engulfing reversal after a significant decline, I'm looking to buy. And if you go through and backtest that over and over and over again, you'll find you'll even get some more rules to put into play with that to know exactly, you know, what's going to make it, you know, to add a few more percent on your side of making correct trades than not correct trades. Okay, I hope that helps. And I'm going to make some more of these videos. So I hope you trade green. Talk to you soon.